down 0.3%. All right. And last you checked, Apple's still down, right?
Yes.
Quite a bit.
Yeah. Probably worsening if the Nasdaq's down.
You mean if the Dow's down?
Yeah, and the Nasdaq. But
all right. Good morning, everyone. Elaine Lowe and Ken Shreve here live at Investors Business Daily in Los Angeles. Today we're checking in on Apple, Starbucks, and HMS Holdings. But first, a look at the indexes. We have the Dow trading slightly lower, the Nasdaq down nearly 0.5%, and the S&P 500 down about 0.3% this morning. What's happening? The Apple not helping the Dow this morning.
no, but pre-market futures were actually pointed towards a nicely higher open. There was word out of the White House that maybe some progress was being made with the China trade talks, and then the White House kind of squashed that talk, and then the focus seemed to turn back to Apple earnings. The stock is down sharply. We'll get into that in just a little moment. But we also had a good jobs report, 250,000 jobs in October, wage growth the highest in 9 years. But I think investors getting reminded that we are still in a market correction because all of the early gains are gone and we are lower now.
All right, and moving on to our first earnings report of the day, that would be Apple. All eyes on Apple this morning, which is trading lower despite beating views for $2.78 and $61.6 billion with profit of $2.91 a share on revenue of $62.9 billion. But it provided a weak sales outlook and also said that it won't be disclosing figures of its important hardware, including iPhones, iPads, and Macs, which to some analysts and investors signals a potential decline in those numbers in the future.
Yeah, it was kind of interesting. Apple typically will lowball their guidance for the current quarter, and their sales guidance for the holiday quarter was a little bit below estimates. But overall, you mentioned an earnings and a sales beat. I think there was some hope that because Apple had been a pretty tame pullback for Apple compared to a lot of the other FANG stocks in recent weeks. There was some optimism that the results were going to be really, really good, and it was overall kind of disappointing. And last check, the stock was down 5-6% on the news.
All right, then. And moving on to another name, Starbucks. That name beating with EPS of 62 cents on revenue of $6.3 billion. That's better than views for 59 cents a share and $6.2 billion. And most notably, their U.S. same-store sales were up 4%, breaking the streak of stagnation that they had where they were recording 1% to 2% comps over the last 3 quarters. People were really looking for some reacceleration in comp growth there, and they found it. So, what's the deal with Starbucks today?
Well, it's no surprise to see the stock up so sharply when you had a much better increase in same-store sales, like you said. So the stock is really gapped up powerfully today. It is up near its session high. It was a gap up over a 59.80 entry, and we always say, when a stock gaps up in price, buying as close to that open price is pretty sound strategy. The thinking being that buying demand is so strong, volume is so heavy, so Starbucks still looks actionable here with the gap up and the fact that it's holding gains so far as the broad market deteriorates.
Right, and that's quite a big gap up because Starbucks has essentially been consolidating, for the last couple of years, essentially.
Yeah, if you look at the weekly chart, it's a big, long sideways consolidation, and you can even look at its recent high around 64, 65. It did gap up over that, too, so very bullish performance for Starbucks, no doubt.
Yeah, and strong outlook for fiscal 2019 as well. All right, lastly, let's take a look at healthcare cost containment specialist HMS Holdings, which is soaring on strong Q3 results. Now, this is not a name that we talk about much here.
No, but it does have a pretty good track record of fundamentals, and this is a name that has been in and out of our growth screens over the years. It's on the thin side. It is kind of a small cap name with a somewhat light average daily dollar volume, but just wanted to note HMS today because it is gapping out of a base here. This is a recent 15% pullback, so the recent consolidation does qualify as a flat base. So you do have a nice gap up for HMS Holdings. You can see it hit a 52-week high today, strong move, and a nice earnings report here. So, starting to see some interesting growth stocks moving nicely. We've had Health Equity rising above its 50-day moving average, but we're still in a market correction, and market is still kind of weak today. So new buys are still kind of risky at this point.
Okay, so even though we've been seeing a little bit of a rebound in the last couple of sessions, still a bit of a wait-and-see pattern here?
Yeah, I mean, this is really the fourth day of the rally attempt, and I think there were some that were hoping that, Apple and a strong jobs report would bring buyers into the market, and that was the case for a little while, but we've turned lower, so market's still in a correction. New buys risky, just kind of tread cautiously, look for good setups when they appear. We're starting to see some, but still kind of the exception, not the rule.
All right, good thing to keep in mind, folks. Thanks so much for watching, everyone. Don't forget to catch us across all of our social platforms. That's Facebook, Twitter, YouTube, and Instagram. We will be back Monday morning. Thanks so much for watching, and have a great weekend.